Hey, how's it going, guys? Welcome back to mentfx, and this is the sixth subsection of the SND section 2, where we deal with in-depth refinement. So at this point, a lot of you should understand that when we look at SND zones, they usually, or the ones we like to use, are the ones that are usually left unmitigated. However, you all recognize that just because they've been mitigated does not mean that they can't still be a valuable area. Now, a reason for that is because when an SND zone forms, especially when it's on some kind of a higher time frame, right? So for instance, if we just go ahead and find one right here, right? So for instance, this right here, as we all know, is of course a supply and demand zone, an unmitigated one, a move up before a move down. And as you can see, it's technically mitigated. Now, just because it's mitigated doesn't mean price can't come back up and mitigate it properly, come to mitigate it again, and then drop off. The reason for this is because when a zone like this forms, when there is a buy to a sell, inside of that zone are still unmitigated areas left behind. So there's going to be price levels within that S&D zone that need to still be mitigated, as there are orders in there that now need to be defended by smart money, the institutions, by the composite men, whatever you may want to call it. So in this video, we're going to specifically deal with basically refining zones. And in some cases, we're going to see how you over refine. We're going to look at a few examples so a lot of you can understand exactly how refinement can take place. Now, the positives of doing refinement are that you really do decide on the last possible area that price can come to mitigate, right? So you're going to have some kind of move. This might be your buy to sell, right? Maybe a mentfx block right here. So again, if you haven't seen everything, make sure you do. Otherwise, a lot of this will not make sense, right? Maybe a mentfx block, price moves down rather impulsively. Let's say something like this, right? So price moves, price is moving, price moves down, creates the mentfx block. And inside of here, you again have multiple POIs inside of that mentfx block, right? So even though this is an SND zone of a mentfx block that's unmitigated, and in the future you can expect something like this, there's also areas in it that you can refine to, let's say, the SND zone up here, the one in here, the one in here, the one in here, right? So there's multiple supply and demand zones inside of that larger one, which is a mentfx block, that still can see those, mitigations and then continuations lower. Now, what we're going to do is we're going to find a way how to take even some of those zones and refine them to the last possible area. Now, when you do that, what you allow for yourself is basically the most potent type of confirmation before you get involved in the trade, right? So if you have a zone really refined to the last possible area it can go, it will literally be within, 0.2 pips of a zone, right? So even though this zone right here is about 20 pips, we could refine that to literally about 0.6 pips of a zone. Now, doing that means that either you'll be very right and price will tap in and give you the confirmation you need to go short, whether it's double mentfx blocks, whether it's Wyckoff, which you'll learn about in section 3, right? Whatever the confirmation is, whether it's a break of structure, right? So there it could be heading up and then a break structure from that exact zone. You have very good confirmation, and the probability of this zone holding increases drastically when you have movements from that zone that are quite perfect, right? So these are the very positives of it, and they also allow you to have a much higher RR when they do hit. Now, the negatives of it is that when you do refine zones like this, sometimes the zones get traded through very quickly, which again, it can keep you out of trades, but also means that you have to wait till the next break of structure or the next new SND zone forms, right? And another negative of it is that prices do not always have to reach your over-refined zones. Now, of course, if prices do reach those zones, it's fantastic, because then you can look to get involved on a very higher R basis, which is what we like to do as traders, especially with a higher success rate. But it's very common for when you refine an area, right? So this area here definitely got tapped, right? But if we went and refine this to potentially the last zone up here, because there probably is one up here, you can see that prices never tapped it, and we miss out on this entire down move right here. That's sometimes part of what occurs if you over refine an area, okay? However, when it does come to tap it, it's very, very good for you. So I myself like to utilize a lot of refinement, and I'm okay with waiting for the perfect opportunity to get involved, but this is how we go ahead and refine. So right now, again, hopefully you're taking notes. Something that's very simple and how we operate in the markets is as follows, right? It's kind of a 3-step system. We have trend working itself, right? And we have a break of structure. That's step 1. Step 2 is having an area where we expect prices to come. And step 3 is drawing out the liquidity, right? So step 2 is your SND zone. Step 3 is where your liquidity lies. And your expectation is that price will come in And your fourth step is basically to confirm that area, look for double mentfx blocks or Wyckoff to formulate in this area, and then begin the markup to come and clear that liquidity, right? This can be applied to any time frame and across all time frames. Now, instead of just looking at this as a large area, what we can do is take that same S&D zone, which is oftentimes going to be an area like this, right? So as you all know, this is an unmitigated S&D zone. So is this one right here, right? So is this one up here, right? On a larger time frame. So if we go to like an 8 hour, you can see it right there. So you could honestly use this one right here, right? Last up move, or even this one right here if you already refined it a little bit, right? Those are all examples of where price pretty much, right? Here we go on an 8 hour, break structure to the downside, has an area from which it did it. You have an area of liquidity, and you expect the mitigations in here with confirmation that you can then take to the lower side, right? And again, this is just an example. Of course, this is my liquidity right now because I'm looking at this on a higher time frame, but this is an example of how to utilize it. What we do is oftentimes we look for the break of structure, we look for that liquidity to be formed, we look for the return into an S&D zone, and what we're going to do right now in this subsection is look at the refinement of one. So instead of having this large zone, you'll have literally one tiny area, right? Maybe that looks like this, that you have basically shown, and you look for the confirmation in there to then go long, right? And if prices stop just a little bit before it and go long, that's unfortunate. You'll miss out on your trade. That's one of the downsides of refinement. If prices go down and through it and don't give you any confirmation, then sadly you cannot get involved even if it begins to confirm it, because you have the refinement done. And what's the point of refining something if you're not going to stick to the refinement? Or what would be basically the best case scenario, price comes in, taps it perfectly, and then continues higher. So let's look at a few examples of refinement and how you can make refinement happen. And again, I'm going to show you that it can be applicable to absolutely any time frame whatsoever. So let's start on GJ here just for a second. What we're going to do is, so I had a few areas refined because I had a call with someone, but let's take a look at this. So very simply, under the 3-step protocol we have, we can all understand and agree that this right here is a break of structure to the top side. As that break of structure to the top side is made, so let's go like this. Just like that. As that break of structure to the top side is made, we have an area that we consider liquidity, right? So this area right here becomes liquidity to the top side, with the idea, again, that price wants to come and mitigate whatever is left in here and continue higher. As we all know, we like the S&D zones that are unmitigated. So in this case, this one is absolutely perfect. But now this leaves a very large area. And if we play out price very quickly for a second, you can see it taps it, moves higher, but then comes back into it, taps it deeper, and then moves higher again. So theoretically, under what we learn, the way we teach, this is a mitigated supply and demand zone. And if you were to take trades off it, you might be caught on the wrong side of the market. And maybe you don't even count this one right here because of the way it's tapped, which is where refinement can come into very handy. So how does refinement work? The way you want to refine is you want to take that area, and the way refinement's going to work is by telling yourself a story about the way liquidity was created, the way liquidity was taken, and the way price moved within that area. It's not as easy as just taking the last down move before the up move by going to lower time frames. So we're going to deal with a little bit of this in webinars in the future, but right now, let's just deal with a few examples to try and get your mind thinking about how we go about refining areas. So because we're on a daily, we need to recognize that going to 5 minute or 1 minute is too drastic. If we do, there's going to be a lot of price action. If this is our zone, there's going to be a lot of price action in there. It's going to be very hard to refine. So we're going to work our way down by refining that zone to smaller time frames and then to the much smaller time frames. So if we jump to a 15 minute, for instance, and we go to the left here, you can see we already have a lot of price action. But now we can ask ourselves, what is it that price did? This is how refinement is done. We ask ourselves about how price played. So again, we can think about it. Price was basically delivering lower, taking out lows as it did, right? So again, swing lows are liquidity. We will deal with this in section 0. If it's not out yet, don't worry about that. Section 0 will be released later. But grabbing the liquidity below these lows, breaking higher. After those breaks higher occurred, you can see that prices came back to test the last S&D zones in here, right? Last down move before the up move. Unmitigated gets mitigated by these wicks right here and continues higher. So let me zoom in on this so you guys can see what I'm talking about, especially if the screen is a little bit bigger, right? Comes down, comes higher, leaves that zone, that needs to be mitigated, comes to mitigated, continues higher. Leaves this little zone that needs to be mitigated, comes, breaks down, mitigates that zone, and breaks higher. Doesn't ever confirm this S&D on the higher time frame and begins to drop back. So as this drops back in, it's actually doing what? Mitigating some areas in here, which we don't have to worry about right now because this is technically the last low before the up move which is made right here. As you can see, we then make this down move that tests this supply and demand zone and this little wick that comes to liquidate the low of this wick, right? So we're just telling ourselves a story. And as it breaks structure to the top side, we notice that this area is actually left unmitigated. So in the future, we can assume this area right here, the top of the wick, right, that you can see is unmitigated, to be potentially mitigated in the future. Now, we're not done. There are potentially multiple refined areas within a zone, right? And this is a daily zone, so that should make some sense. And we will basically talk to ourselves and ask ourselves about how or which areas are more likely to hold based on probability and based on the story we tell ourselves. Price breaks to the top side, makes a down move before not move, again, leaving behind some kind of supply and demand zone, comes to mitigate some of it, comes up, right? Comes down, mitigating more of it, then liquidates it. Now, this candle right here actually acts as a mini liquidation of all the lows in here before a big move up. And before that big move up, the price comes to test the supply and demand zone inside that wick, because remember, a wick is considered as a supply and demand zone on a lower time frame. So it comes and tests it with this moves before breaking higher. And this break higher goes ahead to put in new highs, goes ahead to basically verify this daily supply and demand zone, right? And thereby leaving behind this last down move before the up move that, as you can see, has not been mitigated. How so? You can see this little imbalance area here. So what we can do is we can count this as the unmitigated refined zone. So you could draw a little box out. This is technically the last zone, but this is just the open of it, okay? Now, because of the fact that price moved in this specific way, we do have two zones that we can consider and use for potential bullishness in the future. Now, due to the fact that price came to liquidate the lows here and made this move and tested it, leads me to believe that the odds of coming down here are lower. Why? Because coming back down here to destroy the orders that they had to sell, to buy in here, wouldn't make any sense and would actually mean that we'd probably be looking to drop even lower. So for that reason, we delete this one and we assume that the refined last point zone of this daily overall area is this area right here. Now, again, what we've done is we've taken a zone of about 90 pips, which could be led to confuse you, right, if price ever does tap in, and basically leaving behind, like this, leaving behind an area that's about 11 pips. If not, you can go and refine this further. So now at this point, we can delete this, understanding this is that last move, and we can go a little bit lower to see if we actually can. Yep, we can. And we can, again, remember, this is all inside of that daily zone, refine this further. Now, again, as we get inside here, you can see that the refinement that you could make becomes very minimal. The last down move is technically right here. Now, does it make sense to refine to this last down move? Technically, yes, it does, because this last wick here liquidated this wick here and then broke structure. So this could still be a test, but under what you've learned in the other sections and what you will learn over the webinars and everything of that nature, this last down move right here is also its own mentfx block. So I'm more willing to leave this in, especially since we've refined this area from a daily chart. So this is technically the area that you want to see price tap into and move away from to look for those confirmations, right? Whether it's double MB, whether it's Wyckoff as it comes in and transfers weak to strong hands, which again, you will go over in section 3 or on the public YouTube, okay? So we have that basically done. We'll go to a 4-hour. And now, again, like I said, the positives of having this refinement done, right? So what we're looking for is this whole area that on a daily was a very large area has been refined to really 0.01 pips from a 90 pip move, which gives you a very good idea as to where you can expect price to go. So price does break that structure, right, on that daily. And now we expect that it wants to move all the way back in, tap in, and then move to make the liquidity higher. At this point, the way you have to think about this is that no price action in here really matters. You should have, because you're refining, you don't need to worry about this mentfx block or the supply and demand zone here or this large supply and demand zone here or the mentfx block here. This is no longer your concern because you've went ahead and refined, right? You can in the future, you'll find out that you can either refine an area and leave that as your confirmation area, or you can leave a pretty large area and allow price to refine and give you an entry later. So in this case, because we're refining, we are not going to be using the higher supply and demand zones. So let's take a look at what price does. Price does come up, makes that high. So now, right, because we're on a daily chart, right, under the parameters of a break of structure, a supply and demand zone, price comes back into it. This counts as liquidity, right? That's the new high. And we're looking to get involved off confirmations in here to take ourselves to the top side, or we just buy in there, right? So again, it's fully valid to do something like this, right? Just like that. Just like that, and go 1 to 3.84 on it. Or it's also valid to do what we did just now. Whoops, sorry, we went a little bit too you can see the refinement and how it worked right there. But we're gonna go and take a look at this. But it's also fully valid, right, at the same time. So if we go back to the 5-minute chart, we go down here, right? It's also fully valid to look for some kind of buy opportunity just like this, right? So this is the exact same trade. This is how you have to think about it. The exact same trade that we just viewed on the daily is seen like this, right? This is honestly the same way. This is still a refinement. This refinement leads us to get to 1 to 56 instead of 1 to 3, but this is perfectly valid, right? I don't usually do stuff like this. I go and confirm it, but what we've done is we've taken that zone, that daily last down move before the up move, that would have delivered to us basically this refinement with this as the high, liquidity, right? So from a 1 to 4, we basically refine down to a 1 to 56, right? And that's perfectly valid. And again, you'll go inside there and you can watch price as it approaches it, and based on if it hits it or not, you can get in. Now again, what's the positive of doing this? And let's see how that advantage is shown real time. So as price drops, you can actually see, okay, so it's not tapping it yet. You can see price actually taps it right here. So if you had used just the unmitigated supply and demand zone on a daily chart, this has already tapped it, right? And is honestly giving you a rejection. And on a lower time frame, you might start to count this as a break of structure. Now, instead, it comes and liquidates that. So again, this is one of the positives. It keeps you out of false moves. Now, if price wanted to stop here and go and take new highs, the negative of having this refined is that we never got this low and we never got our entry confirmation. But now that we were able to basically wait and have an alert or something set here, we can see how perfectly price comes to tap this area. And already on a lower time frame, you can look to refine that, or look at the refinement entries inside there. Oops, sadly, I did that again. Let's go back to a 15-minute. Right, so inside here, even on a 5-minute, if we went ahead and let's zoom into here. If we went ahead and looked at here, you can see that we already have Wyckoff playing out. The breaks of structures in that Wyckoff, the multiple structure breaks inside there, and the multiple entry confirmations you could have had off the Wyckoffs in here, off the last supply and demand zones in here, off the last breaks of structure and tests of those supply and demand zones here, and so on and so forth, right? And again, on an even lower time frame, which you'll learn about as you make your progress with mentfx, there's going to be more likely than not very, very second level refinements that you can make inside of there on double mentfx blocks, right? And things of that nature. Now, if you just look at double mentfx block confirmations, you have this big down move followed by this down move into it, right? And that already, as it breaks higher, can be valid at the 50%, right? Because that's how we utilize the mentfx blocks. So once it's validated with this move right here, this is already a valid buy inside of there. And again, this can be just an example of how you can utilize the concepts available to you and make that same trade that would have ran 1 to 3 on the daily if you just took it to now a 1 to 20 confirmed trade to that same liquidity, right? So if you just want to take the zone on your own, just crazy like this off of refinement, you know, that can probably give you the most RR. Otherwise, you can wait for confirmations like this. Otherwise, you can go inside of there and look for confirmations as well. So now that you understand the positives and negatives of refinement, we can go and take a look at a few other instances of how refinement can be done, right? So we're just going to look at random areas where we basically saw the idea of a break of structure, a supply and demand zone that got hit, and we're going to go and see if we can refine it to the perfect last move. So what we're going to do is we're going to jump on EU very quickly and see if we have a zone in here we can use. So honestly, remember how we spoke about this move right here? I think it was on a 4-hour, right? We again have the same thing. We have prices that came to break structure. We have an area that's left behind, and then we have new liquidity created. So the idea under these parameters, the 3-step parameter, whatever you want to call it, is that prices want to, so this is the liquidity, this is the break of structure down, want to return to here, and then continue to break down in liquidity. Now, instead of just taking the zone again, or looking just to refine inside of the zone, we take it the extra step and look to fully refine this overall up move before the down move. Because remember, if we're talking about the validity of a supply and demand zone, this one has technically been tested. But that does not mean that there aren't areas inside of it that still have orders open in them that can be tested before the down move. So let's see if we can refine it further and see if there's actually a way that we could have predicted or anticipated that move. So on the 50-minute, as you can see, we really had these last up moves before the down moves, these up moves right here before the down moves, and honestly, this has all been tested. Okay, so the last real up move before the down move could technically be drawn to this mentfx block. Now, if we get lower to like the 5-minute or even lower in a second, as we look in here, we now gain a little bit more of a perspective of what happened here, right? Again, you have to ask yourself about the story, about how liquidity was delivered and how the areas in here moved to formulate that higher time frame SND zone. So in this case, prices came up, liquidated these zones, dropped, came to test some of the SND zones in here, dropped, leaving behind this SND zone. But why wouldn't I use this? Because this SND zone didn't really do anything important. It's a very small zone. As it dropped, it started to come to liquidate some areas, dropped, tested those areas, and dropped again, leaving behind this little imbalance right here. So if I was to refine this area, I'd probably leave it on this mentfx block, right? Because this is a mentfx block, a move up before the down move, as well as this zone right here. And the idea under these parameters is that if price is to tap this in the future and drop off, we are good to start looking for sells. Or if it's to come up to here and drop off, we are good to look for sells. Now, again, the negatives of this is that if price is to tap somewhere in the middle, we are going to be staying out of this overall move, even if we are correct about the direction. That is how refinement's going to work. Sometimes refinement is going to give you the perfect zone, and other times it's going to keep you out of the trade that you might have wanted to take. So now we can go ahead and see where price played out to. Again, as you can see, it actually reached right about into the center, so it didn't give you the confirmation that you wanted to take. Now, if you use the entire area, just like that, like we had earlier, and maybe looked at the 50% of it, which is another way to refine, as you all know, then you would have had an opportunity to get involved. However, if you take the steps of over-refining an area, like I did here, there are going to be times where you stay out of the trade, and that is part of refining a zone. So let's go and take a look at a few more refinements and how they work. So let's go to maybe like gold. No, let's go to something I've been maybe looking at, maybe an odd CAD. CAD, didn't really see anything here. Odd USD. So that's actually what I'm looking at right now. So let's go find just a random pair, maybe like USD, SGD, something kind of random. I was looking at this earlier with a client, but what we'll do now is we'll take a look at this and look at how we refined, or why we refined these areas, and how exactly they worked. Okay, so let's drop down to like a, I think it was a daily, right? Let's take a look at this. Sure, we can delete most of this and then take a look at it from a new perspective. Okay. So for instance, this is a good example right here. This is actually a perfect example of what we kind of do. So let's assume that at the time of, we had these breaks higher. This is a structure break higher, and you have zones in here that you might want to see price tap into. Again, we know that it did not tap into. However, because we're able to be in the market at either side of the market, when you saw, for instance, this happen right here and this break of structure, your anticipation already, falls in place. What I mean by that is we again have a break of structure lower right here, right? This counts as a break of structure lower. And as we create a low, that low now functions as an area for potential liquidity, right? Now, again, this is normal structure. This is normal SND zones. You can see it's unmitigated. And your idea could be that, price wants to tap into it and go and attack the liquidity down here, right? So about 1 to 1.26, and lo and behold, right, price does play out and gives you that 1 to 1.26. But we can take it the extra step and refine that same area. So notice how we just did a refinement on a daily chart. Now we're going to look at refining on a much lower chart, and we'll look at a few more examples so a lot of you can understand it on some random other pairs. But the idea now is, let's go ahead and refine this zone. So let's go back to where it happened, which is pretty much here, right? And then it broke down. Let's get down to a lower time frame, about a 5-minute. Let's ask ourselves, where are the last moves up before the down moves? Really, if we are to look at the story of price here, the real last up move was pretty much here, and there's nothing more to it. That's the refinement that you can make. Now let's take it the extra step. Let's get a little bit lower. Now again, as we get lower, notice what price did, and let's ask ourselves how we could refine it. So on a 1-minute, right, price came to liquidate those lows, came down, made a liquidation of whatever high was here, right? Because this is some kind of swing inside of there. So there's a little high there. This comes to liquidate that and then drops off. So really the last zone, the last up move before the down move, can be refined to this move right there. And the anticipation would be that if we are to see bearishness off of a refined zone, that zone should be right about here. Now again, we can jump down to a lower time frame, right? And we can take a look at that again. right, on a lower time frame, maybe you have a better chance of explaining it away. In this case, we do, right? Here's the last up move before the down move. Price comes to mitigate that last up move right here, as you can see. Doesn't actually tap into it perfectly, but again, we have to understand that this move here came to liquidate the highs here and tap into some of the imbalance here. So we're fulfilling areas, right? This is a little bit more advanced, but this is how you want to tell a story about price. Then prices came down and dropped off without ever testing the imbalances in here, and then continued to drop. So this would be a false refinement. This is where the real refinement would happen if I were to trade this specific area. Now I'll jump back to a 5 minute, and remember, this is a very small time frame refinement, but just this refinement alone, which technically you could say is valid to do this out, right? Because this is the high that was made right there. And again, that same 1 to 1.6 to now the new liquidity low, which I believe was made here, right? So let's play that out a little bit. That's liquidity low, yep, is now a 1 to 13.33, a much higher RR. Now, you don't just take the sell, right? We could also wait for prices to reach up into there, and if we see the perfect mitigation and move away, then we can begin to use the structural plays to go lower, right? Now, again, this is just an example of refining an area, and again, notice how I'm refining that from a 15 minute. You can refine across any time frames. Your daily zones can be refined, your 4-hour zones can be refined, and your 15-minute zones can be refined, and even your 5 and 1 minute zones can be refined, but it's going to come to much lower time frames if you are to go and make a system on much lower time frames. So now we just look for price to come back up, right? Always remember that we are still in where? This impulse down, right? A very simple way to think about price is we wait for the structure breaks, we look for our S&D zone to get hit, we look for liquidity to be delivered and taken out. Right? This is very simply what we do, right? We do a lot more than this, but the idea is, right, at the open, boom. This is an idea of what you do to the liquidity, right? 1 to 1.25 can then be refined to the last possible up move, right? And it can be refined to a much bigger trade. This is the idea of not needing to FOMO in because you constantly have opportunities to get involved. So we might have this open and drawn out, right? Prices come up, tap into it, I guess in this case, very perfectly. That's why we refine the way we do. If prices had stopped a little bit before it, maybe even here, and then gone down, that's unfortunate, but that again is one of the positives or negatives in this case of refining a zone, right? Because you're not looking at this zone anymore, you're looking at this one. And in this case, it worked out perfectly and then delivered to the downside. There you go. Otherwise, how could you have gotten involved if you didn't want to just sell right into it? This is a small example of it, but you get down to a lower time frame. We go and watch it on a 15 or a 5 second. So 15 would be fine. Again, you don't have to be on such low time frames. You can do the same thing on the higher time frames, right? But in this case, because it's a 15-minute zone, we have to, if you want to talk about the rule of 30, use the much lower time frames to confirm it. So instead of taking the sell right here, let's get rid of that. Let's think about how structurally we moved. So structurally, right? Structure exists at this low right now. What we'd look for if we want to confirm this area, one, we're getting the mitigation. So we know this area has some potency. There's some smart money orders that are being basically defended here. And we'd look for the price to break down, come to test the last up move before the down move, and continue on its way down. So prices come, make some kind of up move, and do they break down? They break down right here. So again, you're valid now to look for either a double MB confirmation, right? Which you'll learn about in the webinars, or I will have an extra section made about it. So make sure you just ask someone in the group and people will also be able to help you out. So technically this is your last up move before the down move, which you can now use as an entry confirmation, right? Or understanding that there's some potential liquidity here and understanding this is your entire up move before the down move, which is your mentfx block right here. You can look to take the sell right here, right? So both of these, just like this, are valid, right? Just like that, or it's valid to do this as well. Right? Both are fully valid ways to look for entry. This is much more risky. This is much better, but we'll leave it like this just for the sake of explaining, right? So this is a break of structure down, and the expectation is that we're holding our refined zone, so we should now see prices deliver to these lows. And again, instead of looking at a 1 to 1.5 RR trade, even off of waiting for the confirmation, we're able to refine it to a 1 to 10.1. And in section 3, if you haven't gotten there yet, you'll notice that this right here is very, very perfect Wyckoff. Right, with the buying climax, the AR, the ST, the UT, the UTAD, the sign of weakness, and we're looking for the test, right, pretty much, or the LPS, or maybe the test can come a little higher, but this is technically fully valid. Even if you use the very high, just like that, that's a 1 to 5, right, which is still higher than the 1 to 1 you would have originally had if you had used just the supply and demand zone. And keep on top of that, you confirm this area. So if this area didn't want to hold and it just kind of shot through, you know, just getting involved on it normally using this basis would have gotten you screwed. Otherwise, if you use the confirmation, which is what we do, which is confirming that zone, you get a much better entry, okay? So now we can see how this plays out. Prices just kind of drop down. Maybe they come to test. I don't know if they do. Draw this out a little bit. So they actually come and hit it perfectly. And now we want to see that liquidity delivered to the downside, right? So it's just tapping into that last up move for the down move. I'm waiting for it to drop off pretty much, trying to get down to this liquidity. Basically, if we break this, you can go to break even ultimately, right? So that's break even, and you are delivered at about 1 to 10, 1 to 9.18, right? Off of a refined supply and demand zone. Now, again, you could have taken it off the right on the entry, but that's not what we do, because if you've been here for a while, we like to confirm our entries, right? So this is valid too, but we would wait for the double mentfx block entry, right? Which could be this, or you could have waited for another mentfx block to form, which technically would have given you an entry right about here. So up with this high is your stop loss, right? So again, even if you waited for this larger confirmation, which is pretty much confirming the entire trend already, it still gives you a higher RR than getting involved on the overall move that would have been like up here, right? Okay, so let's look at a few more refinements under these same parameters, right? With just seeing a area break structure, come back to a supply and demand zone, and continue to take out liquidity. And instead of just getting involved on it like that, we look to actually refine it, right? So let's go to Euro CHF. Let's just go to the 4 hour and find an area that held and worked the same way. So what we'll do is we'll zoom in here. These are going to be all random for the most part, but I want to go over these to show you how it is that you want to look at price. So I'm going to find one that worked, of course, so we can talk about the refinements that could be had. So let's actually talk about this area right here, right? So very simply, you can all agree that this right here is a break of structure, right? There's no opportunity for prices to like fake you out or make you think that this is not a break of structure down. And the idea would now be that prices, so let's just go like this. We don't need to see where it mitigated, right? So very simply, under the same parameters, we have a break of structure down right here. And on top of that, we have liquidity created at whatever low basically forms, which in this case is this liquidity right here, right? And we have our S&D zone that caused that, right? Which is right there, which we're going to go ahead and refine now. But this is technically valid as a sell, right? Especially since it's a unmitigated S&D zone, right? So this is a 1 to 2.07, or we wait for confirmation, which is exactly what we do here at mentfx. And you can already confirm this whole area. But because it's a 4 hour area, when price gets there, you'll have to stay on the higher time frames. Why? Because there's a lot of area that it can mitigate, right? If you're on a very low time frame in here, there's a high likelihood that price can do this, maybe break down, fake you out on the sells, and then instead break higher and make an even bigger schematic or something of this sort, right? And break down. Now, instead, what we're going to do is we're going to refine that area. So again, we're on a 15-minute now from a 4 hour. And again, we can ask ourselves the question, how do we refine this? Where's the last up move before the down move, right? So let's ask ourselves what happened. Price came up, liquidated some positions, tested it, broke down. Came to test a little bit of the zone in here, broke down. So really, the last up move before the down move can be seen right here, right? So as basically this area right here, or can be seen as the areas up here, right? This is where you have to make decisions. This is the one we'll use for now. Let's get a little bit lower and see if there's any more data about what occurred with price up here. So now that we're up here, we can kind of see that price came up, liquidated those positions, broke down, tested some of those areas in there, broke down. This move right here tested the S&D zone in here. And honestly, this last up move before the down move is also an S&D zone, like a little wick right there. That test of it happened and then broke down. So if this is the area we're looking at, theoretically, the last up move for the down move is right there, right? And on a lower time frame, I'm sure you can notice this and you all understand that wick is actually its own. Okay, so we can't actually get that low, sadly, but that type of, let's see if I can get back there before showing you price. There we go. Okay, so let's get rid of this. Oh, whoops, sorry. So we actually see the mitigation there, which is okay, but let's go like this so we don't see it again. All right. So what we are doing here is we're looking at that last possible mitigation, which we saw on a 5-minute, came to tap into this, right? And this is that last up move before the down move. So theoretically, we just took a 4-hour area, which you'll all notice now was, here we go, right? So that whole 4-hour area that's already being mitigated right now, like that. Here we go. That 4-hour area that's being mitigated right now has been now technically refined to inside of there. even smaller, right? It was a very small area that we refined to. So the idea now is we will only look to sell if prices are to tap into a refined area. So again, the point of what we're doing here is to show you how to go about refining areas. And a lot of the way to do that is to ask yourself about the question, what did price do in that area before it created that S&D zone, right? So this is the area we're refined to. And again, it might hold, it might not. I'm not even sure. But let's go to a 5-minute and watch it play out. So we have that area. So again, all this movement here, even though it's breaking down in structure, was inside of that 4-hour area. And there's a chance that you get stopped out. Or in some cases, you might be able to catch some of the down moves into this. But if you refine, you are going to be sitting on your hands until that refined area is tapped. Okay, so we're waiting for that area to get tapped. Again, none of this price matters. Even though it's heading back down to liquidity, we don't care. We only care about price if it gets to this area. Now, that said, you can see that on lower time frames at the time, you can be already looking for counter trend trades, right? We have structure, breaking bullish, testing, 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 right? On the way up, you can see that same thing occurring. How so? You have a break of structure higher, right? Right here. So you have a BOS up, followed by the new liquidity area created right here. And again, you'll have an S&D zone somewhere inside of here. Now, if we went ahead and refined this, we might find that last down move before the up move that might be refined perfectly, right? How so? I don't actually want to jump on the 1 minute because I don't think we can go that far back. But again, there's going to be areas in here that can be refined to take you higher. And you can then look to buy into those liquidity zones and potentially into this zone here because that's where you're expecting price to get. But the idea is we'd be on our hands if we're looking for that sell position from here. And we'd just be waiting for it to tap, right? And as we wait for it to tap, I mean, maybe it gets there, maybe it doesn't, maybe it goes through it. We'll see exactly what happens. So we have that refined zone, and what we're doing is we're basically saying if prices do get defended here, then we can expect that this is that zone that's going to hold, right? And then break down to here. So as you can see, perfectly, price comes and taps into it, just like we expected, right? And really doesn't give you any opinion otherwise. It tells you, okay, that's the zone that wants to hold. It wants to hold as an overall supply and demand zone because you've refined it. And now as price begins to break down in structure, you can look for the sells inside of here off of the Wyckoffs, right? Which you'll learn about in section 3. Sorry if you cannot see price that well, but there's a few entries that you can get off here off mentfx blocks that now should technically deliver to the lows found here, right? Now, again, price could have stopped right here. Whoops, sorry. Price could have stopped right here, right? And then broken down to that liquidity. And if it did, this is a trade missed. There's going to be an opportunity missed there. But if it isn't missed and it's a fake out and price does make its way back up there and gives you that entry confirmation, and then you look for your double mentfx blocks or the type of Wyckoff that you like to see unfold in these areas or the Wyckoff unfold in these areas, then you can take that to the downside, right? And we can increase this in time frame and watch this break down to that liquidity. And there you go. You have that liquidity met. And that's another way to refine those zones. Now, similarly, we're going to go look at a few more just to show you that, this happens absolutely everywhere. We're going to delete what we see here and go and refine a zone that we understand worked in the past in one of these areas so we can, again, show you what refinements from zones will look like. So we actually refined this one a second ago, so we're not going to look at that one right now. What I'm doing here is I'm looking for the perfect setups where you see a break of structure, an S&D zone, a test of it, and a continuation. Otherwise, we're not really going to look at it. Maybe we should do a 15-minute one to show you an example of how a 15-minute one would work, right? So on a 15-minute, you have things potentially like this right here, right? So what you have is potentially you have some kind of structure breaking down. You have a break of structure to the top side right here. Okay, so let's play back to around there, right? A high gets created. So maybe you're on a 5-minute even, right? And you see structure is delivering to the top side. So now you have a break of structure, right? You have liquidity zone right here. That's liquidity right here. And you're looking for price to basically tap into some zone in here and continue higher. How do we refine? So again, we can go ahead and draw out the actual supply and demand zone, which is this one. And then we can go to the lower time frames and ask ourselves what the story is about price. Now you'll notice that in this case, the story about price is that really the last area that could be hit or that had any mitigation is down here, right? So this would be the refinement zone. You can get a little bit lower if it lets us. Yes, it does. Right? And you can ask yourselves, what's the actual last down move? So price came up, made this tiny down move before the real break of structure. So technically your refinement could now come to this area right here. Get a little bit lower if you want to, right? You don't need to get to the 15 seconds and stuff of that nature. This delivery of price is really ugly, but theoretically you have this tiny last down move before the up move. Now, would I use this area? No, it's too small. But this for me is good enough. Why? Because we liquidated the lows below here, created this SND zone on that 30-second chart, right? There we go, and continued to milk higher. So the real move here that came and broke the structure here, here, and here came from here. So the only way I look to get involved now is if price taps this. Now again, there's no guarantee that price is going to come tap this. It can stop right before it and then continue much higher. That can very much happen, right? So let's take a look. So price comes near it, comes very close to it, and breaks higher. So this is an example of where refining a zone will not always give you a potential entry, right? But if we did see price come and tap in, right, it could have done this and then tapped in. It would have kept us out of all these fake trades and gotten us into the best possible scenario that we could expect, right? And again, this is the purpose of refining zones, right? So if you just use that last down before the up move that was also unmitigated, you actually saw a perfect touch and continuation to liquidity. So in this case, we would have missed a great trade. Now, again, you can do this to any zones. So if you notice this big up move here, right, and you think about this as a structural play, and you want to see price basically come and tap into this last down move before the up move to continue higher, you of course would be viewing what? This right here as liquidity. Whoops. You'd be viewing this as the liquidity above, right? And you'd basically be looking at this zone, whoops, as your SND zone right here, okay? This whole down move before the up move, right? So again, if you notice, it does work and it does hold. And if you did something as simple as taking a 50% of it, fantastic. You have great areas that you can look for confirmation. That's one way to refine. Now, the other way to refine, which is a little bit more advanced, which you've been learning in this overall so far, and we'll go over again in webinars, is to again go back in time. Go back in time to the time price was here, and ask ourselves, how did price deliver in here? Right, this is a 5-minute zone. How could we possibly refine a 5-minute zone? Well, this is where the much lower time frames come in. So if you don't have the second charts, it's fine. You can do the same type of refinement on the higher time frames. But in this case, if you want to be trading, intraday a lot, this is what you would do. So we have this overall big zone. Let's get to a 1-minute time frame and ask ourselves about how price delivered. Okay, so what is the story of price here? Price comes down, liquidating lows, liquidating final lows, right? Comes up, pauses, break structure. Where does that break of structure come from? This move right here. And did it get mitigated? No. So there's still unmitigated areas right inside of there. So that on its own is a valid SND zone that you can use. Now at the same time, there was this down move, up move, but look what happened. It got tested before the big move up happened. Would I use this zone right here? No. Why? Because the validation of this overall supply and demand zone happened where? With this candle. This candle happened after it. This is not important to us. This is the area that caused this whole sell before the buy. And in that sell before the buy, there are areas that are left unmitigated. So now we can go ahead and we can actually refine the zone further if we wanted to, right? This is a 1-minute chart. So this is already valid as is at the open right here, right? And now we took a zone that was about 20 pips and made it literally about 5 pips, if not less, because we've refined to the last possible mitigation area. Now, if we jump to a 30-second, we can take it an extra step. Now, in this case, it's a little harder to take it the extra step. If we really wanted to, we could take it to this last down before the up move. But in this case, we are over refining. Why? Well, because this move didn't do anything too interesting. It didn't do anything except for liquidate this low, and it never tested anything. Still, the 1-minute refinement is that this move is the one that came to test the last liquidation here. So this is the one I would still use, right? Right here. So that's the one you'd look for of confirmations. And again, that takes an entire zone and basically makes it into one line. Now we can ask ourselves, where does price go, right? Price can only do one of two things. It can either deliver you to that exact zone and then break to liquidity higher, or it's not going to get there and you're not going to be able to be a participant in this, right? Because when we refine, we basically allow the precision over time to give us more better entries than having a large area selected, okay? So we can now watch this play out. Let's see if it taps or how it taps or what it does, right? So again, we've taken that whole area and refined to this last move right here. And as long as price doesn't get above this liquidity, this area is valid, right? That's how we have to think about it. If price is to break up right now and get above this, we don't care about it anymore. So again, take a look at that, right? We have no question at this point about this mitigation. When this mitigation happens, we are already basically going, okay, there's orders there that are being defended, and we can now expect the liquidity here to be around. And that's a refinement. Now, instead of looking at this as a whole zone right here, right, watching all these potential mitigations play out and basically being unsure about whether price wants to break higher, now seeing this perfect mitigation of the refined area using our refinement story, if you may call it that, we can now anticipate that prices want to break to this liquidity higher, right? Without getting below this low again, right? So prices now should break to this liquidity is how we look at it. And of course, we know it's going to happen because it's back tested, but these zones that we are selecting are not back tested and they are fully random. Now, let's take a few more looks at random stuff like this so we can understand how refinements are utilized and how we can utilize them. Again, every time I do this, there could be a correct refinement or a wrong one. We don't know if it's actually going to play out or not. We're just doing this to show how we expect refinement to occur. So again, this could be an example of one right here, right? You have a up move before a down move, breaking structure to the downside, right? Breaking structure to the downside, right? But then you can see there's some structure in here, so maybe we don't use this. But theoretically, if you wanted to refine this fully valid supply and demand zone, we could go ahead and again move it from this area to whatever it becomes and see if it's correct or not, right? So let's go back inside here, because the point of, again, this subsection is to show you exactly how refinement should be done. Let's go ask ourselves about the story inside there. So we're on a 1 hour chart, so we can jump down to 15.5. We can jump down as low as we want, but let's go to 15 first, just to start with it. What's the story of liquidity here? The story is we cleared the liquidity right here, came up, came down, tested it, broke down. Nothing really to use. There's nothing to refine, so we should get a little bit lower because we need to find areas to actually refine, okay? So now we ask ourselves, what happened? Price came up, came down, had this basically lower high, lower high, lower high, lower high, lower high, broke down. Okay, cool. Came up, broke down, right? Validating this area. So honestly, the movement in here is not important. The real refinement should be somewhere inside of here is how we have to basically think about this, because this move validated the supply and demand zone. Now, if we didn't use that and we had a larger zone selected like this, I would be utilizing this, right? And my refinement would have been this low, right? But because of the way this has moved, the refinement is honestly somewhere up here. Now, notice how that's been mitigated. So your refinement can then be made with a 50%, and you can refine it to that 50% line instead, like that. Okay, now, if we want to take it the next step, we go to 1 minute. If it allows us, it does. Fantastic. And we can look at this. Is there anything to refine in there? Not really. There's nothing really that we can use to refine in there, which is fine. There's not always going to be. Go to a 30-second. Does it let us? It does. So let's go take a look if we can find it. There it is. Okay. So as you all know, a wick is its own supply and demand zone. Okay. So in this case, this refinement, even though this is the 50% of that move, can be made to this last up move. But if you notice, there's also an imbalance right here. So if we move it down to there, has it been mitigated? No. So here we have a refined, unmitigated supply zone. And what I would expect is that if prices were to reach up into here, off of this move down, we'd be looking for sells just about there. Okay, so that's how we just took a zone that was about 30 pips and refined it to just about, 0.3 pips, right? And even though it might not hold, we have a premonition about what we can expect in price if it is to be this specific zone. So now we can take a look about how it hits it, right? And again, the target would be, right? So as it comes up, we now know that this BOS was created and this is the liquidity that was made. Even though we know price does not make it back down here, this is the liquidity we would target. So the bias at the time of could be something along the lines of this right here. That's perfectly valid, right? And it's fine. But you also have to recognize that when you get a sell up here for a move this large, you can also partial along the way, and you're probably going to be break even if you do want to target liquidity. And if it doesn't make it all the way and fails, this will easily be a break even type trade, right? So let's take a look about at whether this refinement was actually good or not. So let's take a look. Right, so as you can see, in this specific case, the refinement might have actually kept you out of the trade, right? Even though it technically is rejecting from it, it didn't come right to that refinement, which means there was actually an area a little bit higher that it really tapped into, which, you can go and take a look at and try to refine maybe somewhere inside here. But our specific refinement was not the refined area that price wanted to tap. It came in and came through it. So if anything, it's kept us out of a trade that we, under our assumptions that price would get down here, didn't even make. So if anything, it kept us out of a trade that was bad. Now, even though this was a wrong zone, you can see how well it still held with some kind of price. Now, this doesn't matter. There's going to be times where price, holds in a very nice way. and probably gives you some great entries. But in this case, it goes and I think runs the high now. And that's fine. That's how price can deliver sometimes. Again, there's negatives and positives to refining a specific zone. That's how it's going to deliver sometimes, all right? So let's get rid of that. And let's go see if we can take another look at something else, something random, like silver, right? So let's delete all this. Let's go and take a look at maybe a 2 hour on silver, right? So I'm just going to show you that this can be done with absolutely any time frame and just can be played around with, right? So taking a look at this right here, right? We have the same type of thing, right? We have a break of structure to the downside right here. This is a break of structure down. Let's go ahead and replay to this point right here, right? As price starts to come up, we again see our unmitigated supply and demand zone right here. We have our point of liquidity drawn out right here, expecting prices to, again, under just bias, right? Because we formulate a bias at mentfx here, with your bias basically being that price wants to reach up into here and continue down to the liquidity. So how can we refine this whole area that shows you about 357 pips, right? Or whatever it is, because it's silver, whatever, 35 pips. I'm not sure how much it is, but let's go down to 50 minute and ask ourselves, so what did price do? Well, price basically came up here, liquidated some highs, tested it with this wick, and then broke down. Nothing really that we can refine to, right? So we should get a little bit lower, right? So price will show you whether you can get lower or stay on the time frame you're at to refine it. Let's go to a 5 minute. Ask ourselves the same question. So let's replay it all the way back here. So we don't have to deal with all this price action. And again, what did price do? Price came up, liquidating some highs, right? We ask ourselves what price did. Broke down, liquidated some highs in here, tested, broke, created an imbalance, broke structure, came to test it with this wick, and then broke down and validated the supply and demand zone here. So we know that the real last up move before the down move is actually inside of here, right? And if you take your eyes and notice this last up move right here, that has not been tested. So theoretically, you have a pretty large area that you could refine this area to, right? In this case, it could be refined to this as a box if you want to make it a box, right? This is perfectly valid. Or we get a little bit lower. Let's go to 1 minute and ask ourselves what happened. So similarly, this is that refined area. And now, right, just following this mitigation, here's that mitigation of that area and then the breakdown, leaving behind again this last up move before the down move. So again, this can be the refined area that you have. Now that means that if prices come up and stop right here and then drop down off of Wyckoff, you're going to be kept out of the trade. That's the negative. Now if you use the whole blue area, then this is all valid. And if price came up and tested this and gave you a setup, now you're valid, right? You need to have a way that you want to refine or analyze. If you have a supply and demand zone that you want to use as a box, then you need to recognize that the box is what you're using and it can come into it or it can come deeper into it. If you're using a line with the last refinement of a zone, then you need to recognize that what you're looking for is that final mitigation in that area and look to take that lower, right? Refining is going to have its positives, but it's also going to have its negatives. So that's technically the last up move before the down move, right? And again, as you play around with time frames, you could argue a few things. Because of the impact that this move had, you could take it the extra step and say, okay, I'm not going to use the box, but what I'm going to do is I'm going to use this also last move right here. So what I'm going to do is instead of using this whole box, I'm going to assume that either this area or this area wants to be held. And if either one of those hold, I'm happy to take sells down into the place I expect liquidity to deliver to. Right, so let's go out to a higher time frame, wait for that liquidity low to be created right here, right? So let's wait for that to be created. So again, this is a higher time frame break of structure, and the anticipation is that price will come back up, test it, and then keep breaking down, right? Now that also means that because this is a lower time frame, on the way up, there's going to be the same thing, right? There's going to be, so let's actually play, so let's actually play price back a little bit, right? As price is coming down and finally makes that liquidity low, right, on that higher time frame, it's going to start to deliver structure to you to the top side. And again, under this, right, so let's wait for a high to form. So that looks like a decent high. We can assume this is the liquidity, right? Right here's your liquidity up. You have your last S&D zone, which you could technically use as this mentfx block. And your assumption is now what? The price wants to tap into this and run this liquidity. Or if you want to be a swing trader or a longer trader because you have these zones selected, you could be trading up into the zones here, right? Both are valid. But under our idea right now, we want to see break a structure, S&D zone, break to the liquidity, right? So we can also go ahead, and this is now a 50-minute zone. So this is a refined 4-hour or 2-hour zone, right? So again, I'm just showing you that you can do this on multiple time frames. And down here is a 15-minute zone. So let's refine it. Already you can refine to this last down move right here. That's valid, right? But let's go the extra step. Let's go to a 5 minute. Okay, again, you can refine it just as simple as this to this zone right here. 5 minute, right? Let's go to a 1 minute. Just as simple. Again, you can take it down to this last down move here, but what does the story show you? In this case, the story is that the move that liquidated all these lows here was right here, and it broke higher. So is there a point to basically refine it to here? Not really. Why? Because the real move that did anything story-wise was from here. Maybe we can get a little bit lower and tell a different bit of a story, such as this, right? So this might be able to give you a refinement. How so? Price breaks down, breaks down, breaks down, comes up, comes a test, liquidates with this candle, and then breaks higher. So honestly, if you really wanted to go crazy with refinement, the over refinement would be to this last down move right here, which you could honestly put as this move here. So your technical refinement could be here. Now this is again where you ask yourself the question, are you okay with waiting for a mitigation at that exact area? Or are you happy with using this larger area to look for those buys into that higher price action, right? Both are valid. This is where your own way of trading or your own system is gonna come in handy. Right? And again, this is all still part of expecting prices to milk their way up into here. So we're still going to see both of these. So now we have 2 refined zones. Let's get rid of this box now. And now we can see how prices mitigate to these levels. Okay? Just like that. Let's take a look. So on the 5 minute, okay, so actually liquidity becomes this now, right? And now we either come into here or we don't, right? So price comes down, right? And there we have it. There is no question on a lower time frame about this mitigation. This mitigation occurs and prices are instantly fed higher. And again, you can tell me I predicted these before, you know, drew these all out. That's fine. We did this randomly off of these random areas. And again, you can go and test this and understand how it works. But the most important thing is telling yourself a story about how price moved inside of an S&D zone. So if you have an S&D zone drawn out, you need to go find back when price played up into it, made that high of it, wait for the seeing how it moved inside it until it validated it, and ask yourself where the refinement zones is most likely to see a real mitigation in the future to continue on that path downwards, right? So fantastic. We've had amazing buys inside of here if you took them, right? Again, we refined a zone that would have taken you about 1 to 1.7 into a 1 to 7.3, or a 1 to up into here if we do hit this refinement zone, or you could target the mentfx block 1 to 7 into a 1 to 23, right? So much higher and more efficient. And again, as this is happening, you will have new zones formed, right? Break a structure, new area, and again, you can go inside here and refine it. Now, there's nothing stating that it's going to make its way back down there, right? So in this case, it doesn't, right? At all, which means you miss out on trades. But at the same time, inside of here, you have zones again that are happening, right? And even when price looks like this, where, okay, so let's go back for a second, just like this, right? So even when price looks like this, in some cases, there are ways that you can refine. So at the time of, you could argue, we had this break of structure right here, right? BOS up. This created liquidity. So this was the liquidity. And we expected price to come down and come up. Instead, prices came down and broke structure again. So this break of structures don't matter anymore. And now what matters to us? This BOS, this liquidity, or whatever high is created, right? That's your liquidity up. Or you could be looking for more buys to take all the way up into these zones, right? And where's your last down for the up move? Well, technically it's this whole thing right here, right? Which you could technically go ahead and refine like this, right? The very easy way, take it to the 50%. And again, this is fully valid under the way we trade. Expecting prices to deliver prices higher off of S&D zones inside of here, which, I mean, in this case, are all mitigated, right? Giving you 1 to 1.65. Or we take it the extra step and we go and refine that zone again. How so? We go back, just like that, and we go lower and ask ourselves about the story that was delivered in price down here, okay? So let's do it. Let's go to 1 minute and ask ourselves about the story. So prices came down heavily, pushed higher, broke structure, came back down, liquidated lows, pushed higher, came down, mitigated these points here, broke higher, mitigated here, broke higher, mitigated, but left this open and then broke higher. So honestly, the last refinement would be in here. Now, remember what I said about the confirmation of a zone, right? This zone became confirmed with this break here. So honestly, the most mitigations we should look for should be inside of the zone here. So if anything, we should be focused on, as you all know about the wick rule, right? The last down move can also be a lower time frame. There we go. So we have these two lower time frames, S&D zones. And again, we can go and refine them even further on a lower time frame. So even though this one's valid, the fact that the real move was somewhere in here makes the validity of this specific area less likely, right? Because on a higher time frame, you have to recognize that it's all the way pretty much inside of here. And these zones are really the last move. So this is where we'd be looking, right? So this is how you have to tell yourself a story and delete certain points, right? So here we get the move above, right? There we go. Okay, great. So now we get back lower, go down to a 30-second. Maybe we can refine even further, right? So this is where second time frames come in handy. Oh, actually, you can see that. So I didn't play price out enough. This zone was valid, and you can see that it did actually get traded into. So it doesn't even matter to us anymore. So the only important zones right now are down here and down here. Now, ask yourself about what happened in price here, right? This is all inside of that S&D zone, and price broke higher right here. Where did that break come from? This last down move. So yes, this one's valid, but is it likely to come all the way down here? It could, but we could also use the open of here, right? So right here is also a valid S&D zone, and notice how it's never been tested except for this wick. So maybe we use the open, and that's an untested area. So maybe we get a little bit lower to refine that further. There we go. Right, so now instead of just using this wick, the last real down move is right here. And that can be a potential final refinement that you make, right? Now, also, because it's such a small zone, we don't even use this one because we don't expect price to come this deep. We've expected that the mitigations in this wick are enough to mitigate all this. And what we do now is we drop on potentially this one. Notice how this zone is also valid. Why? Because after validating it here and breaking structure impulsively, it was never tested. So both of these zones can now be used, right? This is a 5-minute POI that we just refined using 2 methods. So either you say, all right, I'm going to refine to both of these, or if you're fully confident in your refinement, you go, all right, I want the lower one because I understand this one's possible. So I'm going to just get rid of this one fully. And this is your refinement. And again, on a lower time frame, you can look for confirmations there, or you're valid to look for potential buys off of there into the top side, right? And that already makes your RR go to about 1 to 17.83, 1 to 18, right? Much higher than what you would have gotten had you used the overall zone and gotten like 1 to 1.6, right? So we can take a look at what happens in price here, right? And there you have it. I should leave my thing on there. Yeah, there you have it, right? Draw it over. There you go. And there you have it. A perfect delivery. And it should come and take out liquidity like we expect. And there you have it. That is what refinement at the highest level looks like. The only way to do it, it's not just to go in a zone and say, where's my last down move for the up move? No, you need to tell yourself a story about how price delivered in that last down move for the up move. And there are going to be unmitigated orders that are in the future going to be defended by smart money as they were here when price gets there. And again, on a lower time frame, there's going to be confirmations in there. So again, forget that I'm on a 15-second, 5-second time frame. The point of this is that because we're on such a low time frame, that 5-minute zone, right, that was about this many pips, right? So it was this whole thing right here. So we just took a 5-minute zone that's about 75 pips or 7.5 pips. So 75 pips, whatever, 7.5, and refined it to about 6 pips, right? 6 pips or 0.61 pips. Very, very little. And the point is, you can do that if you understand how to tell yourself a story about what happened with price on the inside. Now, again, remember that we still refine this area here. And again, this is, here we go. So we had this 4-hour break. So this is all still with the anticipation that price is going to keep breaking higher. Notice how many refinements we could have even inside there as it breaks higher to these points here, right? And now we still have these 4-hour areas refined that where we want to expect sells from, right? So we can go ahead and watch these two again. And now we can see if price taps into them, right? So price comes up, doesn't tap in, right? So this is, again, a disadvantage. Price can come close and then move away. Now, if price, it's still valid. As long as price doesn't come below this liquidity point, these two refined zones are still valid. And price could easily have this as a fake out and have a move back up to tap into this and break back down. Let's take a look, right? Nope, and it comes down. So again, advantage is that on the way up even, when we could make the refinements we did, we had beautiful, perfect wick entries that we could take or confirm, right, to the top side. And there's also going to be times, like I said, where you're not going to disadvantage, you're not going to be able to get involved. Now, what's interesting is, remember back here when we looked at it at the time, and I basically told you that this right here is an unmitigated zone and it's technically valid, right? Remember how I said you could use this as a box, right? Even if you refine to this box, right, with that last line, you can see that that's actually, I think, the zone that got hit. There you go. Right, so this is where it becomes up to you about how you want to refine. If you had refined to the 3 zones, you would have had a perfect entry. If you'd refine to this last zone, you have an area to look for Wyckoff, and you get that. And again, you'll go over Wyckoff in section 3. But the point of this teaching, of this subsection, is to show you the extensive refinement that you can do in your system. And again, we're going to look over a few more in the future. So again, this is, as you can see, it applies to everything, whether we're looking at silver, currencies, euro, US dollar, whatever it might be, even potentially. Actually, we'll take a look very quickly at stocks, just to show you one more idea of refining and to teach you guys one more time how you can go about refining. So let's go ahead and delete these background colors because I don't like them that much. There we go. Fantastic. And let's again ask ourselves and find an area where we had the last up move before the down move with proper breaks of structure higher that we can go and refine. So for instance, this zone right here, right? So again, same thing is happening. Same thing is valid over and across all time frames. See how ugly price is? That's fine. Let's just apply what we just learned to this market as well. With break of structure down, whatever low is made counts as our liquidity down area. We find the last up move before the down move, which is technically this whole thing right here, and we can go ahead and now refine it, right? So here's a breakdown. So this is an idea of where, you know, there's gaps in the market and we can still go ahead and refine. Let's go to 5 minute and ask ourselves what happened. So again, what occurred? Maybe it's too high of a price. Let's go to 15 and refine down. Okay, great. So as price came up here, it liquidated highs, broke down. This was an unmitigated zone, right? It mitigated it, broke down, came to mitigate a bit more, and then broke down. So really the last up move before the down move, right, is right here. This is it. That's all you can use at this point. Maybe we get a little bit lower and we can refine, right? How so? Well, as we get lower, again, this is up to play because this is the next move that happened, right? If we play it out a little bit more, I think it just drops off. Yeah. So this is all we can use. So if you wanted to, you could over refine to this point here. Now, what's the likelihood of this holding versus this holding? This is higher. Why? Because this is the real move that took out and liquidated and entered into these zones here. So we don't really want to go lower than that. Maybe 1 minute. Okay, so we can't go that low. Let's go back to 1 hour. And again, we can check out what actually got hit. So we move back into here. And as you can see, the downside to the refinement is that we didn't get our entry. Okay, if you just refine to the last up move for the down move, which could be this mentfx block right here, you had a perfect confirmation entry. But that's not how we did this refined entry. When you refine, there are going to be times you are kept out of trades. But when you refine, you also give yourself the ability to only get into the best possible scenario for yourself. So you need to make your mind up and a decision about how you're going to refine, if you're going to refine, and if you're going to go to the refinement details of using just a line or using an entire box, right? And remember, just like we spoke about even in this silver up move, right? Even though we had this zone refined to somewhere inside here, you know, this is the low one. We spoke about this. If you remember when we gave the story, we said, yes, this is valid. But because of how large this was, we could use here or here. Now, it would be smart to use this because this is technically the last area where they would defend their cells, which they did, right? But because of the way I refined, I would have been kept out of this beautiful cell. But at the same time, I would have been able to catch the beautiful buy entries off the wicks in here. And if you remember, the beautiful buy entries off the wicks that we had inside of here, I think at the 50%, right? With this low as a protected low. And that's exactly what we were delivered. So this is how you refine your supply and demand zones if you want to take your own analysis to kind of the next level. And if you want to be a trader that gets involved a lot. And it might even keep you out of the trades a lot of the time. But when they hit, they'll hit hard. Right? And you'll know very quickly if that zone wants to actually hold to be defended for new highs, or if that zone is not going to be holding, right? Because all you have to look at is pretty much one area or a very, very small substrata of what was a very large S&D zone. So thank you so much, guys. Hopefully that helps a lot of you with your refinements and how refinements work. And I'll see you guys in section 3 or in the following subsections of this section. Thank you very much, and I'll see you guys in the next one.